Hi and welcome to our channel. In today's video, we'll be taking a deep dive into the mechanics of the stock market and exploring the basics of how stock prices are determined. Whether you're a beginner investor or you're looking to improve your understanding of the stock market, this video will provide you with a solid foundation of knowledge about the stock market and how it works. So, what is the stock market? Simply put, the stock market is a platform where buyers and sellers can buy and sell stocks, or shares of ownership in publicly traded companies. When you buy a stock, you become a shareholder in that company, which means you have a small ownership stake in the company and a claim on a portion of its profits. Now, let's talk about how stock prices are determined. The price of a stock is based on supply and demand, just like any other market. When more people want to buy a stock than sell it, the price goes up. When more people want to sell a stock than buy it, the price goes down. There are a number of factors that can affect the demand for a particular stock, including the company's financial performance, the overall state of the economy, and investor sentiment. For example, if a company reports strong financial results or announces a new product or service, demand for its stock may increase, which could lead to a higher stock price. On the other hand, if the company's financial performance is weak or the economy is in a downturn, demand for the stock may decrease, which could lead to a lower stock price. In addition to supply and demand, there are a number of other factors that can affect stock prices, including interest rates, inflation, and political events. For example, if interest rates rise, it may become more expensive for companies to borrow money, which could lead to a decrease in stock prices. Similarly, if inflation increases, it may erode the value of a company's profits, which could also lead to a decrease in stock prices. Political events, such as elections or changes in government policies, can also affect stock prices. Now that we've covered the basics of how stock prices are determined, let's talk about how to read financial statements. Financial statements are a key tool for evaluating a company's financial performance and determining the value of its stock. There are several different types of financial statements that you should be familiar with, including the balance sheet, income statement, and cash flow statement. The balance sheet is a snapshot of company's financial position at a specific point in time. It shows the company's assets, liabilities, and equity. Assets are things that the company owns, such as cash, investments, and equipment. Liabilities are things that the company owes, such as loans and other debts. Equity is the difference between assets and liabilities and represents the value of the company's shareholders' ownership stake. The income statement shows a company's revenues and expenses over a specific period of time, such as a quarter or a year. It shows how much money the company made, how much it spent, and how much profit it made. The income statement is a key tool for evaluating a company's profitability. The cash flow statement shows the company's inflows and outflows of cash over a specific period of time. It shows how much cash the company is generating from its operations, how much it is investing in its business, and how much it is paying out in dividends and other expenses. The cash flow statement is a key tool for evaluating a company's financial health and its ability to generate cash. So, that's a brief overview of the basics of the stock market and how to read financial statements. Understanding these concepts is an important first step on your journey as an investor, and will help you make informed decisions about your money and your investments. Now, it's important to note that investing in the stock market carries inherent risks, and there is no guarantee that you will make a profit. It's important to do your research and understand the risks before you invest, and to diversify your portfolio to manage risk. That being said, investing in the stock market can be a powerful way to grow your wealth over the long term, and with the solid understanding of the basics, you can make informed decisions about your investments and work towards achieving your financial goals. Thank you for watching. If you found this video helpful, please like and subscribe to our channel for more financial tips and insights.